So lots of people investing in real estate these days, and many are using the investments as income, rental income, as a matter of fact. Lisa Green Lewis, TurboTax expert and CPA, is here with us right now to help us understand. There's a ton of things people need to understand when they rent their places out, Lisa. So let's start from the top. I buy a place, I rent it. Where do I report that rental income? Because that is income to me that the IRS is going to want a piece of.
Yes. So you would report your income on your Schedule E, and that would go with your personal taxes. But don't forget, you also get to deduct the expenses related to your rental.
Right. So what are some of the things that could offset that? Because the more I offset the income, the less tax I'm going to pay.
Yeah, there's so many things that you could deduct for a rental. So your advertising, what you pay to advertise your rental, management fees, if you pay a manager to manage your property, repairs, maintenance, you're having the garden maintained, then you would be able to deduct that. If you pay utilities for your renters, you could deduct that. The mortgage interest, which would be reported on Form 1098. You'll be able to deduct that as well, or property taxes. And then a big one, you get a deduction for depreciation as well.
Huge list. People should pay attention to that because you could really get that income down. But there's a rule, right? There's a certain amount of days in order for this to work.
Well, there's a certain amount of days where you need to report your rental income, and that's if you rent your property out more than 14 days. Then that would be the point at which you would report the income and deduct your expenses. So if you rent your property out less than the 14 days or 14 days or less, then you don't need to report the income.
So if I rented my home for the Super Bowl and it was a 5-day rental, I could just pocket that money?
Yes, you don't need to report it on your Schedule E.
That is good news and a big miss on my end because I should have done it when they were at the Giant Stadium. So, okay, so if I'm Airbnb-ing my place now, are the rules different for that?
It will fall under the same rules. If it's over 14 days, then you are required to report it on your Schedule E, but you do get to deduct the expenses. A lot of people, they Airbnb possibly the home they live in. So if that's the case, let's say you're just renting a room, you would be dividing up the expenses based on the portion of the home that you're renting out.
Right. And so with that then comes the utilities that are apportioned to that piece, to that room. Everything basically breaks down as the expenses for against that income.
Yes, that's how you would do it. You would have to divide it up by
And that
that.
all goes on Schedule E, right?
Right. And if, with TurboTax, we walk you through claiming your income and also your expenses, and it figures out the depreciation for you on your rental property.
Yeah, that's super helpful and super important for people to keep really good records if you're going to become a landlord. Although there's a ton of money to be made out there. So there's a lot of people doing it. Lisa Green Lewis, TurboTax expert. Thank you for all that.
Thank you.